Good morning. My clock says 9 o'clock, so we'll get started. Not much has changed in the marketplace, fortunately. As you can see from DUI summary, most of the valley is in a red hot marketplace. The green is my base URL to get to the different things you put in different suffixes. It's going to be important if you're using the Zoom method of accessing these meetings. That is going to change next week. So this is the new one. If you use Zoom, new meeting ID, new password, no more phone access, and that's going to be good for the next 50 weeks, so through the end of July 2021. The handout is out, by the way. I got that out about a half hour ago, which is the earliest I've ever had it out. So it's TINA URL, RE Market Graphs handout, and the 8-digit date code. And the next meeting is right here. This won't change. And that's the reason I set this up with the TINA URL, was so that they only allowed you to do 20 weeks at a time initially. And I thought every 20 weeks I'd have to change it. Now they're allowing me 50 weeks. But this access is easier for me to remember and how I get on versus the Zoom ID and everything else. Either way, doesn't matter how you get here. Onto the market. Here is Santa Clara County, single family homes. The red line is the demand. The demand is above the inventory, and that puts you into a seller's marketplace. You can see when shelter in place occurred, you went into what would be a buyer's marketplace. But once we were able to show occupied in homes and everything, we went quickly back into a seller's marketplace. This is the same sort of information. This is days on sold inventory. This is the single most important metrics. You can see that when shelter in place happened, the market really slowed down. Yes, up and to the right is normally good, but for days of unsold inventory, this is how long it would take to sell all your existing inventory. So the lower the number, the hotter the marketplace is. You can see once we were able to show properties, it came back down, and we have been now stable at about 30 days of unsold inventory, which is a seller's marketplace. Basically anything less than 40 days, between 40 and 80 is a balanced market. Above 80 is what I consider to be a buyer's marketplace. So at 30, that's a pretty robust marketplace. The fuchsia line down here is the median days on the market. You can see we're right at 10. That is up a little bit from before shelter in place when we were down at 8. That makes perfect sense to me. Not that the market's any slower. In fact, the market speed is here, and it's basically, 25, 27 days down to 30, and here you were at the same level. So it's basically the same market. The reason I think the median days on market is longer is agents like myself say, without the ability to do open houses, get people in at a rapid pace, we want to expose the property for just a little bit longer. So I'm putting my listings on Wednesday now and looking at offers on Thursday instead of putting them on the market at Thursday and looking at offers Wednesday. That's 2 more days. Apparently that's the type of thing that many agents are doing. Yellow line is average days on market, and that number is higher. This number on this side, I wouldn't really trust that much. It is sort of about where I'd expect it to be, but it's going to be on the low side because I think a lot of the listings that had large days on market back here with shelter in place were canceled and went away. Price is what everybody's concerned about. The middle line is the median price that most people follow. You can see it's stable and slightly increasing. I also track the lower percentile, which is the 10 percentile, and the upper 90 percentile. A lot of statisticians do quartiles, but then if I look between the two outer marks, only 50% of the homes will be in that sandwich. Now I can say that 80% of the homes are sandwiched between the upper and lower line, and the middle is where 50% are. You can see there's little level spots here, and you can see we go past August the 7th. That's because I'm estimating based on 3 weeks worth of data and 1 week worth of data what prices will be doing in the future. So you can see the 10 percentiles up, the median is basically flat, the upper's coming down. I'm not seeing any really trend, and I'm not sure I'm going to continue to do that after a couple more weeks to verify that it's not useful information. It fluctuates too much just because there's too little data involved in 1 in 3 weeks. This looks at the 2 different things regarding overbidding. The first one is the frequency of overbidding. This is how often are sellers getting more than their asking price. And you can see there's a lag time because you have to get close of escrows, which get sale price. And so shelter in place happened back here on the 16th is when it was announced. So the market continued on, but that was for the pipeline of escrows that were already established. Then you can see we came down, we improved a little bit. it's dropping down here. But again, this is after the 7th. So this is basically the prediction of based on 3 weeks data and 1 week's data. The magnitude of overbidding has basically been very stable, slowly increasing. This is not unexpected for me. Basically, anytime we've had a downturn in the real estate market, buyers get a little more conservative on how much they're willing to overbid on any one property. It makes it more incumbent upon the listing agent to get very close to the asking price. This is an interesting graph that I like looking at. It's basically each line, and there's like 24 lines here, each line represents a week. And so the current week is right here, this red line. Okay, the best month ever was April of 2018. The best August ever was August of 2017. The worst month ever was December of 2001. The worst August ever was August of 2001. So that sort of sandwiches you. Then you come up to the red line, which is the current data, and this is weekly data. The more recent weeks are solid. So you can see we're now been improving ever so slightly, because as you go diagonally up this way and jump from line to line, it's better. And what it basically says is right now on this red line right here, you come down and unfortunately got cut off, but this is probably 15%. 15% of the sellers got 108% or more of their asking price. When it's right here at the 100% line, they're getting exactly their asking price. Here is just cleaning up the data, looking at the last 12 weeks. It's the exact same data. So now you can see that the current red line is sort of right at the best, the top of them. You can see the dotted lines are the oldest lines. Back here, back in June, they're the worst months. So basically, it's been saying we've been improving in June, July, and now into August. This is the same data, just over time people look at. This is comparing 1 week of data at the macro level. So this is single family homes, condo townhouses in both Santa Clara County and San Mateo County. You can see that the frequency of overbidding has been slowly going up. I'm not sure why this bouncing was happening in this time frame. I went back and looked at my data. I have confidence at this point in my data. So it was just a little fluke. And it surprises me to see that kind of fluctuation when you're looking at that large of a sample size, but you're only looking at 1 week. So, a holiday would impact it, things of that nature. And then the magnitude of overbidding has basically been steadily going up very slowly. This is macro data again. We're looking at all the different components here compared to normal. So if we were having a completely normal year, every line would be right on top of the red line. So let's look at what changes from that red line. And one is this blue line, which is the number of new expired listings. And that is up. I would not expect that. And I don't think this is real. And the reason I don't think this is real is earlier this year, there was a lot of cancellations when shelter in place was announced. As we hit those expiration dates, those listings now show up as expired listings. That's what I think explains this. So the next big one is the number of cancellations. Yes, it jumped up this past week, which concerns me. It says sellers are giving up, but it's a 35% above normal. But again, it's only 1 week. There is a fair amount of fluctuation, but it's something to keep an eye on. Everything else is basically right at 100%. So closings are down a little bit, even though offers accepted are right on there. What does that mean? That means that we're having a little bit of higher TFT ratio. I think that's because prices aren't going up rapidly. Buyers don't feel pressured to continue with a bad escrow. Now we're looking at each one of the components. We're starting with days of unsold inventory. The blue line is the data. The gold line is the 5-year history. That's 2015 through 2019, which were 5 great years, and it's the median of those 5 years. So the fact that we're selling just a tad above that, and it's a microcosm, a micro inch above, is a strong marketplace. You can see we've been basically right at normal now for about the last 9 weeks. This is the inventory accepted of inventory without an accepted offer. So these are the properties that are available for buyers to be able to go out there and buy. And basically, since even before shelter in place, there was a little perturbation right here at shelter in place. But other than that, we've been basically going on. To see a huge fluctuation here in the 5-year median is a little surprising, but not really. That's a holiday. That's probably Memorial Day. And so the number of sellers putting their lit house on the market going into holiday weekend decreases. So your inventory goes down. Then those sellers come on the marketplace and it makes up for it. And then it balances out. This year, this is July 4th, we didn't go down this year because with shelter in place, people weren't traveling as much, which is why we have a bump up on both of those for then comparing it to normal. Now we're looking at the number of new listings just in the past weeks. This is what new stuff came on the marketplace. Again, the gold line is where you'd expect it to be. We're running a little bit above the gold line. If you look at it, here we were running a little bit below as people were getting maybe more comfortable with it, and they're now more comfortable, so we're making up for some of this, but we're not making up for much of the lost activity during this period of time. So it's just going to be lost real estate transactions. This is the number of new offers accepted. Again, you can see that we were right on the normal trend beforehand, shelter in place. It came way down. Then we basically slowly improved, and we've been following the normal pattern again. The stuff between the gold line here and the blue line are transactions that didn't happen and appear not to be in position to make up. A lot of people talked about having a surge in the fall. I don't see that happening. At least it hasn't started to happen yet. Now we're looking at the number of closings. This again is somewhat interesting because you can see fairly historically here for the last 4 or 5 weeks, we've been below where we'd expect. Last week we went back up, but this weekend we went back down. So this was just a statistical fluctuation. Why, I have no idea, but that's one of the reasons I don't use 1 week data normally, but this is to try to figure out what's happening right now today. This is the number of expired listings. You can see the blue line is basically, I think the data point's right here. So we're slightly above the gold line, which is why the red line is slightly above the horizontal. We've been having a little bit more expired listings than you'd expect. But again, that's those canceled listings that are hitting their expiration date. New cancellations, basically right at 100%, a little fluctuations up and down. We're a little bit up this week, so maybe next week we'll make up for it by being on the low side. You can see the up and down sawhorse stuff back here. Then the number of withdrawn listings, this is new sellers giving up on the marketplace. No historical data on this because they wipe out the data once the expiration date is reached. With 30 listings out of 2 counties and both types of properties in 1 week, I don't think that's a big deal. Now we're moving on to sort of the geographical area map. This is based on overbidding. It's a combination of frequency and magnitude. Those two are fairly in line with each other, and I'm adjusting my definitions a little bit to get them more in line. Not hugely, but for example, on magnitude of overbidding, my definition now for normal marketplace, a balanced marketplace, is from 99% to 1.5% above asking price. So from 99 to 101.5% is what I call a balanced marketplace. And then the frequency of overbidding is from 33% to 50% as a normal marketplace. Above 50 is into that seller's marketplace, below 33% is into that buyer's marketplace. So the red is the seller's marketplace. As you step through, there was 1 week that went by with no change. There's another week with no change. There's a little bit of a change, and then we went back. So basically for 5 weeks, there hasn't been any change in the market conditions based on closing. So that's historical data. Now we're shipping over to current data with days of unsold inventory. Here you can see 5 weeks ago. And by 5 weeks ago, we're talking 29 days. Most of the valley is in a red hot seller's marketplace. The San Mateo, Santa Clara County border is basically in a balanced marketplace. There you can see Redwood City went balanced, now went back to a hot marketplace, now back to a balance, and now we're up to current date. So you can see there's basically been no fluctuation, and those fluctuations in Redwood City and the other area, which was Palo Alto, Los Altos, were very minor, but they were enough to put it over the color change on the graph. Here is something that I've shown, and I don't know how many more weeks I'll cover this. This is the market conditions based on days of unsold inventory before shelter in place. Red means red hot seller's marketplace, white is a balanced, and blue would be a buyer. So no area was in a buyer's marketplace, although the expensive area of San Mateo County was very close, because 150 is my definition of becoming a buyer's marketplace, but it's just under by 0.3%. This is the current conditions here. So overall, you can see that we were basically the same, but a little bit better. And then this is whether they're better or worse. So seller would be a better marketplace, a faster marketplace. Same would be roughly the same magnitude, roughly within about 2%. And a buyer's would be a slower marketplace. So it went from 37 days to 52 days. So that gives you an idea of days on sold inventory. Same concept for overbidding based on frequency, overbidding based on magnitude. And then on pricing, there is no buyer-seller marketplace for a given price. So this is just whether prices went up or down, and you can see that every area, the price is either up or the same. This graph was just to explain a little fluctuation, and that was basically here in the moderate high condo townhouses. It was the only one that went down. This week it's come up enough that it's even, but the reason it was down was there was this fluctuation right here at the time frame of my basis. So it had a high benchmark, and so of course it went down. And that's the kind of detail that you start have to paying attention to when you get something that doesn't make sense. And we're now going into a section of 11 different metrics. I moved median days on the market up to number 2 because it is starting to become meaningful data now. And then in each one of those 11 metrics, I'm going to have 5 graphs that are the same. I'm only going to discuss one and then plop through them pretty quickly. The purple vertical line is roughly equal to when shelter in place was announced, but it gets bumped around a little bit, and I did not have time to adjust them. So you'll see some that are a little too early and some that are a little too late. This one's just about on the market. This is really close. This is one we're going to discuss. This is a county level. So the red line is Santa Clara County single family homes. The gray line is San Mateo County single family homes. And the yellow line is Santa Clara County condo townhouses. Shelter in place was announced on the 16th. Days of unsold inventory immediately started to increase. We were able to start showing properties. Again, it decreased and it's down here. The big takeaway from this to me is the single family homes are right back to where they were. Condos were the hottest marketplace before shelter in place, and they're worse right now. So why is that? Potentially 2 major factors that I think are going in there, and this is pure speculation because there's no way to know why buyers are doing what they're doing. To me, it's more important to know just to know what they're doing. But my speculation is with shelter in place and commute not being so bad, people are now saying, hey, instead of buying a condo close to work, I'm going to buy a single family home and telecommute to work most of the time. Or now that I'm working at home, a condo isn't going to meet my needs, so I'm going to have to hold out and buy a single family home. So I think there's been a shift away from the smaller, more convenient homes to less convenient, larger homes. Stepping through the different areas. And now we're talking about days on market. So again, the same concept. This is median days on marketplace. You can see Santa Clara County is the fastest, sitting here at 10 days. San Mateo County single family is close at 11. Condo townhouse in Santa Clara County is about 14 days right now. So that's just a ballpark. 50% of the homes are selling in that time frame. And if you went to anywhere else in the country and said you're selling 50% of the homes on the marketplace in 10 days, they'd probably look at you like you were crazy, that just doesn't happen. Stepping through the different micro market areas. Now we're looking at inventory available without an accepted offer. And the reason I try to explain that each time, I know it sounds a little redundant, is most people use part of the pending transactions. They consider active listings to be a listing that's in escrow with a binding contract if the listing agent wants that property to be shown. That doesn't count in my book. I mean, most buyers' agents do not show those kinds of properties. Anyway, so this is raw, no offers accepted. You can see that the peak was back here somewhere around May 23rd. And that's a little unusual. Normally the peak is amazingly right here around July 19th. Now we weren't down very much. Why this discrepancy? I think right here we may have been pulling in a little bit of the stuff from here that, not a huge number, but some to pull this number of active listings up without depressing the current inventory. But I would say that we are starting to slide down based on what I'm seeing here. And then these are your other county benchmarks, and then the other 19 micro market areas there that are clustered pretty closely together. Stepping through. Now we're going to look at the number of offers. Again, likewise, the number of offers happen a little bit earlier. Normally they happen back around May 30th, and that ties in, actually it's the Friday before Memorial Day. And so it's the 5 weeks before that. So the 5 weeks before that were essentially the month of May and a little bit into April. Well, we were in shelter in place and weren't able to show property. So clearly that was not the period of time when you're going to have most of the offers accepted. So we're up there. I expect this to roll over, plateau, and start coming down. It's, again, I don't see a big rush of the lost opportunities here coming back on the marketplace. Yes, there might be some, but not a large number. Stepping through the different areas. Here we're looking at the number of closed transactions. It's still on a climb upwards. There's the lag time for the length of escrow for that to show up. But again, no indication that we're in particular trouble. Stepping through the areas. This is frequency of overbidding. How often are people overbidding? You can see where all three of the county areas are basically right on either side of 50%. And again, if 50% of the sellers getting more than their asking price, that really is not a bad marketplace. I mean, there's no way to say it so many times. So stepping through. Now we're looking at the magnitude of overbidding. Again, we're sitting there right around 101%. Yeah, we're down from 105%. Yes, we're nowhere near the 112%, but in the 112% was sort of like the max for Santa Clara County. San Mateo, I think, actually hit 114% of sellers' asking price. But anytime you've gone through something, a recession, a 9/11, any of those things, buyers are a lot more stingy, tight on overbidding a seller. So they come in a lot closer to the asking price. So again, this is the time when it's important for a seller not to underprice the property by very much, because then they're going to start leaving money on the table. Stepping through the different micro market areas. Now we're on to price. This is the 10 percentile price that most people don't pay any attention to at all, but this is what the lowest level of homes that you can buy in a given area are. So to me, it's valuable. This is single family homes. So basically in Santa Clara County, you have to have $800,000 now to buy a single family home. And that obviously is going to be the very low end properties. Condo townhouses are down here around $500,000. And up in San Mateo County, you need $1 million. Stepping through. Now we're going to discuss the median price. And again, this is the county level. Here you can see condo townhouses are pretty flat. That doesn't really bother me. They're a much more stable product. They're getting hurt more than single family homes. The fact that they haven't lost any value to me is fairly significant. If you look at single family homes, they're basically flat to up. At the beginning part of the year, they were at 1.2 million before shelter in place. You know, here's shelter in place, but remember this is sale price, so it's delayed. So basically at shelter in place, you were up to 1.4 million. You dip back down, you're back up, and now I think we're just under, I think we're at 1.375 is I think what that real number is. And San Mateo County did essentially the same thing. It was down at 1.4, went up to 1.8, came down to 1.6. Now it's back up to 1.8. So no indication prices are getting hit. Stepping through the different micro market areas. So here we have the 90 percentile. I'm not going to say much about it. It's the same trend where prices are generally up. I don't see any indication prices are down at the upper end of the price range as well as at the lower end. So stepping through. Now we're looking at duration of escrow. This is really not that significant. And because I have monthly data to do, I'm going to skip over this. Here is the data for each of the different micro market areas as of this morning. So this is current data. It ends at midnight last night and goes back for 5 weeks. So, here's your different areas: Santa Clara County single family, then South County, the affordable areas, the moderate priced areas. So you can find out what area you're looking for. You can find the DUI. What's really interesting to me is DUI in South County is at 21. It's one of the fastest marketplaces in the county when it's normally one of the slowest. So that's part of why I'm saying that people are accepting an inconvenient commute now with shelter in place and getting more house for the money. Here's some of the definitions at the bottom where there wasn't room on the single family homes. This is San Mateo County single family homes. And then this is condo townhouses in both counties. And the handout will have this data. There's 110 slides. or you can do a screen capture because these will be archived on YouTube. So now we're looking at the monthly data. My July data is July 1st, the first of every month, and then for 35 days afterwards. July is 31 days, so I should be catching the data on August the 5th. So I'm not sure why I have August the 6th there. I'll have to look at that. But this should be August 5th. I got the data on August the 4th, went back 35 days. This is active inventory here. Now, there's nothing really that exceptional. The median price is up at $1.4 million, $1.7 million. So, you know, that caught my attention because, you know, back here it was at 1.4. So what I then went down to, looked at size of houses, and, you know, yes, it's higher than these back here. Most of these are, you know, like 2,000 square feet, but then a lot of them back here are even below 2,000. Then the bedroom and bathroom count were higher, but not significantly higher. You know, the bathroom count's up. So, you know, this is a little bit of an indication that maybe more expensive homes are spending a longer period of time on the marketplace. But average days on market is 20 days, median days is 10, days of unsold inventory is 28. The list price, and this is now we've bumped into offers because you don't have the days of unsold inventory until you have a speed. So now you have sale price. The list price of the offers that were accepted was at essentially 1.4 million. Get into the number of transactions that were accepted. So we sold 1,133 homes. You can see that that's up compared to the last 2 years, which is good. If you look at, you know, and this is, I guess if you look at this updated number is probably the most consistent data in my thing. And that's because I've changed data and I went back and recreated it. So at 1157, and the reason that's higher is some agents are late reporting their sales. Here you had some TFTs that we haven't had yet, so this number will probably drop down. But when you go back in time, you can see 1157 is a completely normal July. So, you know, even with all the restrictions, we're selling as much property as we normally do. This gets you into the square footage of the different houses, getting down to sale prices of the houses. You can see, okay, I was off by $5,000. The median sale price is 1.380. I said it was 1.375 earlier in the thing. But again, that's a new record high from what I can see. 2 years ago, we were at 1,350. You know, I'm going to call that a tie, and even with last year. So basically, we're flat from 2018. Number of closings at 1107. You know, if you look again, you know, that's not a bad year. There's a few years here at 12, but I mean, you're 1202 versus 11. You're down maybe 9%. And, you know, you have to go all the way back to 2009 to have a significantly bigger year, and then all the way back to 2005 to have a way bigger year. And that, to me, is the real story, is early in the 2000s, we had a lot more activity than we have recently. And that was when the no documentation loans were easy to come by. And those are not around as much now. So here's just a quick summary, a big warning that, you know, if you're using Zoom to access the meeting, the URL has changed for next week. My teeny URL will be the same. And now we're into monthly data. Here's where I explain that I get the data on the 5th or the 6th or the 4th after the month, depending on how many days. This is a logarithmic scale or semi-logarithmic scale. And so the slope of the line is the rate of appreciation. And you can see we have July data here. You can see we've been flat for this. You can see the high-end prices up a little bit. But basically, you can see for the last 3 years, prices have been basically flat. And that's what this graph is clearly showing. Here is the more normal analog scale. So this is the system that most people are used to seeing. The light color is the 90%, the 10 percentile, and the horizontal line is the previous record. And so you can see we are above the previous record. In fact, the 10 percentile is now at the previous record high for the median price. The median price is up here, and then the 90 percentile is up here. Again, fairly stable in pricing, no decline for sure, and slight upward pressure. This is the same thing for just the last 10 years, the last 20 years, and that's the last 10 years. This is the last 10 years frequency of overbidding. This is the frequency here, the fuchsia line. You can see we're basically down at 50%, turning around and going up close to 55%. Here is the magnitude of overbidding. we're up at 105%, came down, and we're right now at about 101.8% or something of that order. The horizontal line here should be very close to 101.5%, which is my definition. Here's the last 20 years. This is the price decline ratio for real estate. Price decline ratio is for the stock market, and they do it based on units. I'm doing it just on the percentage above and the percentage below and doing a ratio. I do want to look at doing some way of doing the number of units, but that takes a lot more work and haven't gone there in 20 years. This is the key indicator. The blue line is days of unsold inventory. Again, this is monthly data for Santa Clara County single-family homes. You can see we shot up, we came back down. Anything below 40 days is what I consider to be a seller's marketplace. Between 40 and 80 is a balanced marketplace, and above 80 is a buyer's marketplace. And you would expect we'd spend a lot of time in the neutral marketplace, but basically we don't. The only time we're spending time there is if we're transitioning from a seller's marketplace to a buyer's marketplace, or from a buyer's marketplace to a seller's marketplace. Doesn't make sense to me, but we're either in a red hot marketplace or we're in a buyer's marketplace. The fuchsia line down here are median days on market, and this is your average. So you can see average is lower than you would expect and lower than it normally is. And I think that's because when shelter in place happened, a lot of sellers that were on the marketplace gave up and disappeared. So their high days on market went away with them. Here's the same data going back for 20 years. This is trying to come up with a moving average. So what I do here is I take July data, then I take June data and May data, and I go back and I take 12 months data and average it to see if there's any fluctuation, which way the market's going. And I'm not really seeing any trend. The biggest trend is inventory is decreasing. We went through a big increase. So, if we didn't do shelter in place, would the line have been more horizontal? Who knows? But, this is way before shelter in place, because you're talking about a year ago. Shelter in place happened, right about here. And so, because this vertical line is a quarter, so this would have been basically March the 1st. So basically it's saying inventory is decreasing after shelter in place compared to the previous year, months. Same concept going back 10, 20 years. This is looking at the 10 percentile price ratio to the median price. And this is the 90 percentile price ratio to the median. So here you can see that they converged, they got closer together. The blue line, the purple line came up, the fuchsia line went down. That had price compression. Then starting here in 2007, you can see you had price expansion, and we're in some mild price compression going on now. And I think this is my last series of slides. I think I'm down to the last 3. This is overbidding. This is on a monthly basis. So here is July of 2010. The orange line down here is July of 2019. So what's that saying? It's saying July of this year, right now with shelter in place, is better than we were doing in July of 19, which people would have said was a good year. The reason people are at all concerned about the marketplace maybe is these years of the solid lines are all the recent years, and they're basically all better. So from people's recent memory, we're having a bad year, and that is true. There's one year out of the last 8 years that's worse. There's another year, looks like 2016 would be my guess, would be the same. And 2014, 15, 17, 18, and 13 were all significantly better years. But now if you look at the historical, the dotted lines here, which are the oldest lines, they're all way worse than the current year. And the dashed lines are all worse. So we're doing better than 2/3 of the years out there. Not a bad place to be in. This is now looking just at the last 12 years. So you can see again, the more recent years up here, we're doing worse than, we're doing better than the older years. The exception to that is we're outperforming 2019. And I think that would surprise a lot of people. Now we're looking at individual months. So we're going back 13 months. What's happened in the last 13 months? Same concept. The solid lines are mostly above, except you have some down here. These are June. So this would have been, when June and May are right down here are very bad months. But even those bad months are better than December of last year. So December of last year, when everything was fine, we're not as bad as those years because they're going to be down here. So again, we're sort of in the center of the pack. We're improving. I see no reason not to expect it to continue to improve as long as nothing else happens. And then here's the table of the data again. And we have about 90 seconds for anyone to unmute themselves and ask questions.
Hi, Richard.
Hi, Lily.
Hi, how are you?
I'm doing good.
Okay. I think on the tables that you give us on the page 91, I think that's a pretty good table, but it's page 91, I believe. So I think that's only for the Santa Clara County single family house, right?
Santa Clara County single family homes, because, you know,
Right.
Historically, I wasn't,
Okay.
I believe firmly you only want to compare the same product to the same product. And single family homes in Santa Clara County are the biggest marketplace that controls the market. And
Right.
I only started doing the macro combined data when I'm trying to look at what's happening in 1 week.
Yeah, so this is a pretty clear, you know, you can see all the numbers. And then basically, I think the price remained the same in the last 3 years.
Yep, absolutely.
Okay. Yeah. So I think that's the trend. Okay, good. All right. Yeah, I think that's all.
All right. Thanks.
Thank you. Yeah, thank you.
Anyone else have a question in the last 40 seconds?